Right, and well done for completing the awakening. So obviously we've got a nice little surprise, a nice little additional surprise for those who have completed it. And here it is. Got a few videos for you. So let's jump right in. There's no reason not to. So we'll start off with H1. Obviously, significant inducement that we're trading away from, and now we see we're building equal lows. Okay, so then we jump in, we understand, like, okay, we understand that this level will ideally give us a reaction, because if it reacts away, what does that mean? Well, it brings people into the overall buys. Again, we give another reaction, even better, right? And look at how we react away. Boom, big momentum, so everyone's like, oh yeah, we've got to jump in. We give another break of structure. So, maybe smart money traders are jumping in here, but you've got your resistance traders obviously on H1, your equal lows, they're all jumping in. So now we can see just visually that, okay, there are going to be quite a lot of people interested in buys. So what do we wait for? Well, ideally, we wait for Asia to end. Okay, now Asia has ended, and what do we see? We see Asia high intact, right there, and we're pushing to the downside. We're doing what? We're breaking structure to the downside. So now we've even got some smart money traders who are interested in the sells, right? Then let's just get this for our timing. So that is obviously Frankfurt, and the what's it called? London will obviously appear. So let's just do a dashed line for that one. Make it a little bit smaller, actually. Okay, there we go. So let's keep playing. Okay, Frankfurt open. We're not too interested yet, but we can see, like, okay, we're even creating this nice little channel to the downside. Again, they get in. 1, 2, 3, third tap, and then boom, break to the low. So they're in. Smart money traders are getting interested as well. Ideally, we give a reaction from here. We obviously don't have to. But now, what is coming up right round the corner? Well, in about, what are we now? 30 minutes, we've got London open. So that would be the ideal time for us to induce high and come much lower. So let's see what we get. Okay, we induce a little bit before London open. We didn't quite get smart money trap reaction, which we would have liked to see, but okay, let's wait for our confluences. Okay, so now we're seeing, okay, we've got an inducement at London open. We've taken out all of these sellers and we've brought in more buyers, so more people are interested. Breakout traders are getting interested, break and retest traders are getting interested. More people are adding to their position from the equal lows, so we're just, more people are interested in the buys. Overall, the majority of people in the world right now are buying, at least on an intraday perspective. So what do? Well, we wait for our confluences. Okay, there we go. There's our relevant break of structure after an inducement at London Open. So what is the ideal trade? Well, it's obviously mitigation right here. And where could we think about targeting? Because it's always important to think about, before you even get into a trade, you should really know where you're taking it to. You don't just want to be blindly taking an entry because it appears. You want to understand beforehand, like, okay, what points am I going break even? What points am I exiting? Maybe what points am I partialing? Stuff like this. But again, we can understand, well, we should understand this by now. So that's one entry. Okay. Now, again, we understand from the higher time frame that realistically our target should be down here. That is the ideal. We've faked these equal lows so much now. We've also got this like intraday equal low here, right here, show you. So obviously we've got, not intraday, sorry, but obviously Asia low with these lows. So obviously overall equal lows with Asia low. So we have a lot of liquidity built to the downside. Loads of people are looking for buys, and they will potentially take more buys if we come down to these levels and react away. So that's why this TP makes a lot of sense. So let's continue to play. Okay, so now you need to think like, okay, what point am I going to go break even? Now, maybe you're going to go break even here. This is not something that I can tell you. You should have a rule set based around when you want to go break even, when you should go break even. Especially with risk management, you should not be second guessing yourself with risk management. That is like the one place where you should have like obvious rules that you follow each time. You should not be like, oh, was this a valid break even? Was this not? Should I have left this on? Blah, blah, blah. You can obviously adapt your rules as time goes on, but you should understand pretty much all the time when you get into a trade at what point you're going to break even, if you're going to break even, because you know some people don't. Maybe you want to remove your risk and leave your SL open. Maybe you want to remove your risk at 1 to 2, 1 to 3, whatever it is. But you should understand the key points in the trade for how you're going to manage it. So like I said, TP, SL for granted, obviously, entry, obviously, and then also if you're going to partial, what levels you're going to partial, and stuff like that. So anyway, let's keep going. So now, ideally here, what could we potentially have away from the medium, away from the inducement, sorry. Well, we could have, again, pull back into another mitigation. We know our targets are much, much lower, so this would be like an ideal scenario. Again, this is just on the M5. Don't have to go any lower. You can if you want. There you go. So you can take that one. Boom. And then, you know, if you're like not fully confident, you can, I mean, in this case, it's like really obvious. Your TP is like really obvious, but if you're like really unconfident, and you need like, you feel like, oh, I need to partial to secure something, obviously here is pretty good, or like, yeah, if you really, really desperately need to partial, right there. And then from there, you just let the trade do its thing. Now, ideally, we get like, to bring in more buyers here, you'd want to see a reaction from like either the equal lows, like one final thing. Doesn't really matter which one, but ideally you want to see that reaction away, so we see them bring in more buyers. So like, not really that. No. Ideally, they would have given like a much bigger reaction to fake it one last time, and then you can potentially get like another entry to the downs. Fake it one last time, like, you know, really fake it, like come up to like here, then you can potentially get another entry and take that to the lows. But obviously that is like a really, really simple example, combining like the higher time frame with the M5. The one thing you always want to do is you want to make sure that your intraday time frame aligns with your higher time frame, because you can have these like equal lows, for example, right here, but if the intraday time frame, if the intraday like story doesn't make sense for sells, then it's probably not going to sell right there. But here obviously we see, okay, like Asia, nothing but buys, we have equal lows here, huge move off, so we know everyone's interested. We bring the people into sells prematurely, one final push, London Open inducement to the high side, and then obviously we get this big follow through to the downside.